Hey, what's up guys? This is Dave. So in this video, I'm going to break down for you the Euro USD trade which I have take on the Thursday. So the point of this video is not to flex or show you how good I am, but I want to introduce you the concept and show you how actually the trading can be not easy, but easier if you follow the processes and the rules which I have introduced in my program. And in this video, which I'm giving you into the public, you should take a note because there is going to be few things which might just be a missing points in your trading and helps you to click how to find a good level, how to form a setup, and maybe how to completely change how you look into the markets. So let's get into it.
So before we break down this trade completely, how I came into the level and everything, the bias and all these things, I have prepared a small presentation which I want to take you through right now. So it's a bits from a coaching program, right? So we will be looking into this CLS setup, right? So let's start with the first thing. What is the edge, right? Edge is nothing else than a probability of one thing repetitively happening more often than another. It's a definition by the Michael Douglas, author of the book Trading in the Zone. I recommend this book to everyone because it's really best masterpiece about a trading psychology, right? So we're trading a CLS. I'm not gonna be explaining right now what is the exactly CLS and the logical things behind it, but it's simple a logical mechanical framework with the objective and contextual logic, which removes the room for the subjective decisions, right? So in my strategy, I'm trying to have everything mechanical based on the rules. So I do not want to have a room for thinking, okay, it's gonna be like this or it's gonna be like that. No, everything is defined exactly at to the point, right? But still, we need to have in mind that nothing is absolute and definitive in the markets, right? There can be sometimes the things looking a little bit differently or the moments when we don't see it clearly, like I had it this week. If you remember from my Telegram channel, I didn't have a trade from the Monday until the Thursday because nothing was clear for me or I wasn't seeing something, right? Also remember, no trading strategy has a 100% winning ratio, right? Although a CLS approach has a high winning ratio, we are still humans and we can make a mistakes. Sometimes you will not see something and might be approaching markets wrongly, and then when something plays out you realize that you've been wrong, right? So losses are basically inevitable and it's a cost of doing a business, right? It's necessary, it's the part of it, right? So you need to train your brain by the backtesting, and the more examples you experience, more confident in the execution you will be, right? It's very important in a trading, right? So by just watching this video and even taking the notes, you still need to do the work, right? I still recommend at least 100 backtested examples, right? And I am so confident with this method that if you join my coaching program and you find out that it's not for you, after making 400 backtested examples, I will refund you all the money because I'm sure that if you do the 400 examples, you will see a profitability in here, right? Okay, so anytime you come to the charts, you need to ask correct questions. What is the current market structure? Are we in the trending markets, ranging, or we are in the reversal? Potential reversal I have added in here because only if we are only a higher time frame level, right? Then you are looking for the potential reversal, right? If it is trend, is it bullish or bearish or the flow, right? Are we in the discount or the premium of the markets, right? Because you do not want to be shorting in the discount because you are going to be a liquidity with your stop loss in the premium. And also you do not want to be buying in the premium. You want to wait for the discount always, right? What did the last candle? Was it expansion or was it range? Based on that, you could be expecting the next potential outcome, right? So from the range, you can have the manipulation reversal. From the expansion, you can get consolidation and expansion, or expansion retracement, right? Where is my potential level for the entry in the discount and the premium, right? Also, where is the price heading? Is there a room for at least 2-to-1 trade until we reach higher time frame level, right? All these are very important, right? And you don't try to predict markets, but you always stick to the rules with the if-then scenarios, right? And all of these, of course, are part of the trading plan. So here is my one. If you want to, you can get inspired from it, right? So I need to have defined I define the market bias, right? What time frames, right? Obviously, at this moment, I everything remember in my head, but it's great to read it time to time, and especially if you are beginner, read this before every trading session, before every time you come to the charts and looking for the trades, right? Setup qualifications, right? We run only 2 trading setups, right? Entry model number 1, entry model number 2, right? There is a definitions, right? Also, I got a trade checklist. Currently, I'm not looking at this like before every trade, right? Ticking up. But for the beginners, it's definitely great thing, right? Also, I defined where is my low probability conditions when I'm not trading, and by sticking into it, it saves me a lot of mistakes. So as you see, recently my trading has a quite high win ratio with a very small number of the trades because I am following these rules. Also, I am putting here my mistakes, right? Why is this important? Because if I have recently made the mistake that, for example, my stop loss was placed wrongly, right? I didn't update the Monday range and these things. If you write down your mistakes, you turning them into the lessons, and the next time when you read it that you did these mistakes, you will not do it again, right? And then obviously I have defined my entry model number 1 and 2. This is like a grow of the strategy, but it of course has a more and more elements which comes to the conclusion when you start to doing it, right? We are looking on the bias based on the last candle closes, right? We need to define our CLS range, which is mostly quite big candle, which is digging into the liquidity previous highs, or the manipulation is going into the highs, right? Once we get close inside the range, then we can be targeting 50% or the opposite side based on the market structure, right? And same it plays obviously for the bullish side, right? So then when this is happening, and of course higher time frame key level is involved, then we're looking for the expansion, right? Then we have the other type, which is when the candle is closing below in here, right? Then we're looking for what? Then we're looking for the continuation to where? Into this low, right? How? We are looking for the pullback at least into the 50% dealing range, right? I will explain you how we measure the dealing ranges. And then there we are looking for the key level and we want to position ourselves, right? And same for the bullish case, if we have the candle closing above like this, then we expecting these highs to be reached, right? So what is then our goal? Waiting for the next profile, right, which could be consolidation or the retracement around a 50%, not around, obviously always below, and then we are positioning ourselves to the upside, right? That's a simple definition, right? Obviously all of this is just a pattern, and we are not a pattern traders. Everything needs to be in a context. With CLS lenses, we're looking for the manipulations to the continuations, right? What is different in here from what you know maybe until now, we don't trade market structure shift or break, right? Because it's a manipulation and it's a pattern, right? And again, I don't say there's not something wrong on that, right? But what many people do is that they basically get a, you can see in here, right? Many ICT traders think like, all right, liquidity was taken in here, now we have the break, right? And then they're expecting like a pullback, right, and continuation down, right? Which is wrong. And that's where the CLS gives you a roadmap what's happening on the markets, right? Anyway, in the uptrend, we are looking for the rejecting lows and breaking the highs, right? Breaking the highs, rejecting lows, breaking the highs, rejecting lows until a CLS sequence range is fulfilled, until a key level, right? And then there you can see this our pattern, right? You can see these things which we having in here, and this is how we need to put it into the context, right? So we can see a CLS candle, then you can see a manipulation and close inside, and that's where you positioning yourself to the upside, right? Obviously it trades also in the counter trend, you can do that, but we want to focus only in the correct ones in the uptrend until a CLS range sequence is fulfilled, right? And what we are doing, we are also mixing the time frames, right? So on this example, you can see that we can have a weekly CLS range, right, with the manipulation in here, and then we can be forming our trade, right? Probably you have seen on my analysis until a 50%, it's a model number 1, and then you getting a opportunity for the model number 2, right? What is powerful on this method is that we can actually trade a lower time frame ranges within the higher time frame ranges, right? So here is a weekly range, but within this weekly range we can have a smaller daily range, right? As you can see in here, this one, and even in this daily range you can find the lower time frame range, 1 hour, right? And that's the power which gives you an opportunity to enter with a smaller stop loss and target a higher time frame range. This is what I'm doing in the current trade, which I will be breaking for you in the moment, right? Obviously everything has to be with the correct time frame alignments, right? So just quickly, if you're trading the weekly range, right, and the weekly levels, and you're looking for the weekly trend, you will be trading from the 4 hours and the 1 hour accumulation, manipulation, distribution entries, and so on and so on. This is important. You cannot trade from the weekly level and try to enter on the M15. It's simply not in the correct alignments, right? And then obviously the dealing ranges, right? Discount and the premium, right? ICT concept, one which I adopted and I quite like it. It's obviously nothing else than just a 50% FIP, right? So if you have a swing point, you basically not entering until the price reaches 50%. That simple it is, but I still use these dealing range words because I kind of like it, and ICT deserves his credit for that. Anyway, so what we are looking for in here, we always want to define our dealing range, but how to do that, right? Many people doing it wrongly. You can have a dealing range in the expansion swing. It's always expansion swing, right? The swing which breaks the highs. Where from you are measuring it? You measuring it from the point which rejected the lows, which took the liquidity until it breaks the highs, and then you obviously waiting until the price start to retrace, right? Then you can draw the dealing range, and then you're looking for the trade below a 50%, but exactly where? This is important, and I will show you then in the charts, because this is powerful thing how you can find exact level, right? This is something what I refine it and define it by myself, and you will see how it works. we always using two time frames, higher time frame and the lower time frame. Higher time frame we using for the dealing ranges and the lower time frame for the market profiles, right? It's a concept which I'm explaining more in the details in the coaching program, but not gonna waste your time with it right now. We want to see a lower time frame profiles in happening in the discount, right? This is a premium, this is a discount, right? So it can help us build a higher time frame narrative, right, where the price could be going, and it can help us to frame a trades, right? But also it can help us to set the targets and also to filter the trades, right? So you basically do not want to be entering in here, or even you have a key level in the premium and it gives you a bounce, right? And for example, change in the order flow or some order block or breakout, whatever, you do not want to be trading it, because mostly this is just a fake how the market makers engineer the liquidity. What's gonna happen when this happen in here? Traders who enter in here, let's say trend line break or whatever, they put stop losses in here, right? And then here in the discount would be a level, and that's where the price then come down and the real move will start, right? So you want to avoid this, right? So remember, price always goes, obviously now I should not use always because nothing in the markets is definitive, but price mostly goes and gives the best level, best opportunity in the first low which broke through the midpoint, right? So we have the dealing range, right? We have some, let's say, a low in here, and then price went up. Here, below this low, is where the price will dip, right? And that's where you will be looking for a level. I will show you this on the price section. This is how I entered it in this example, right? Anyway, another thing, continuation entry filters, right? So it's a profile plus key levels, right? So I will just explain just two, right? So if we have the expansion plus key level in the premium, what is that? It's a retracement, right? Order range. So what does it mean? Let's look back into this dealing range, right? So if we have expansion in here, right? And then we have a key level in the premium, and then we get expansion in here. What is it? It's a retracement. It's a retracement of this move, and retracement is followed by expansion down, right? It's important. It helps you to filter the potential outcome, right? But if you have expansion plus key level in the discount, right, it's a lower time frame reversal and the continuation setup. This is what you want to be looking for, right? There is a few more, but I'm not gonna waste your time with these right now, right? So here is an example how it works, right? You should be looking for these big manipulation candles, because these are what's defined a swing points. As you can see in here in the low, right, you have a big CLS candle manipulation, and then price is going up, right? You can see rejecting lows, breaking highs, right? Then again, price start to retrace, right? Where it is retracing into the discount, right? Into the first low, which broke through this midpoint and key level FVG, right? And again, interestingly, it forms our CLS pattern range where we get the manipulation, and that's where we are entering, right? Again, price, what it did here, rejecting lows, breaking the highs, right? Start to do retracement into where? Into this FVG, and again, we got our pattern, right? Again, and that's where we are entering, right? If you remember, that's what I've been showing you in here, where it is, right? You see how is that happening? That's maybe something which you didn't see on the markets, but that's how it's happening. Why these big candles? Why these, right? Because it's a manipulation candle. They're going strong. They're going strongly down. After this candle, which is breaking maybe some lows in here, it convinced many people that it's bearish, and as you can see, suddenly it reversed up, right? Then you got reversal, how this reversal has played, right? Look again, big volatility, big CLS candle, right? Manipulation and reversal, right? So that's something what is still happening, and that's what you can see on my charts. If you see my analysis in the trading view or the telegram, etc, right? And then there is the trading model number 1 and trading model number 2, which is very simple, where we are looking for this our CLS range manipulation, and then we are entering and targeting specific levels, right? It's very simple. And again, one more thing, everything needs to be put correctly into the context, right? So this is example from one trade from the maybe 2-3 weeks ago on the euro, which I have taken. And again, we have the same thing in here, right? We have big CLS candle in here, right? But what's happening in here? Closing below, right? So what's next potential outcome? Going for this lows, right? And also we have this another one in here. What's happening then? Price start to consolidate, right? But where we are going for the key level in the premium, right? And then price manipulation and price start to drop lower, right? Anyway, so here is a key takeaways from this presentation, right? Always know the market structure, right? Are we in the trend, range, or the reversal, right? Constantly update discount and the premium dealing ranges, right? Look to the lower time frame for first low or high manipulation in discount and premium. This is what I will show you on the charts, right? Trade from the level below or above first low and high in the discount and premium, right? Know where is the higher time frame key level or the liquidity where we are heading, right? This is also important. Master the profiles outcomes, right? That's what you need to know. What after the expansion is the potential outcome, right? Because you do not want to be entering after the expansion, right? If the market moves sharply, if it expands, you do not want to be entering long. You need to wait, because what's coming then? Consolidation, retracement, or potential reversal if we are on the key level. If we are not on the key level yet, then it's going to be a consolidation or it's going to be a retracement, right? After the consolidation can comes what? Only expansion or the expansion to the reversal if there is a key level, right? So as you can see, just by knowing these things, it will help you to filter the next potential outcomes and what is going to be happening on the charts, right? All right, so let's go to the charts right now. So here is the trade. Hope you took some notes and maybe you try to find the things on the chart so you can learn from that, right? Anyway, I think that instead of telling you I entered here based off this and that, I think that the best thing will be if I completely delete everything from this chart and I start from the beginning, right? So let's do that. I'm going to delete it and I will bring everything back step by step, right? As I told you, before I do everything, I have my trading journal, which is part of my coaching program, and that's where I put my all notes, right? This is important. How I came into this trading method, how I improved myself by doing these things, by writing everything down, taking a lot of screenshots, right? And that's what I'm doing constantly, right? Here I got my trading analysis, right? Remember, into your journal, you need to put everything, even if it's not working, right? So this is the analysis for this current trade. I have adjusted my trading journal into my strategy. So everything I do is actually adjusted into it, right? And here is the pre-analysis, what I was looking for, right? It was the Wednesday CLS range, right? And here was my order block, here was my level, dealing ranges, etc, etc, right? Anyway, I just want to force you to start to do journaling. If you don't do that, you should start, because that's where you will learn everything. All right, so let's start on the monthly Euro USD. I always start on the monthly, right? Where we are right now, right? Can I see some levels or something like that? Yes, I do see this fair value gap in here, right? Let's extend this one in here like that. And you can see the price is basically dipping into the 50% of that, right? And right now I want to show you something. Actually, in the beginning of this week, I didn't see that because I had this fair value gap from the weekly, and what I was thinking is that we will reach this 50%, right? So I was thinking that maybe the next candle will go lower, but it didn't happen, right? So it has played from the monthly, but doesn't matter. I didn't have a trade from this bottom, but it's fine, right? So what do we see also here? Do we see some CLS range? Do we see some CLS candle? Yes, I think that this is definitely the one, right? We can see it's a big candle, right? No matter where it closed, it's a big one. Is it dipping into the liquidity? Yes, it is. Here we have these lows, right, where we are dipping below it, and also FVG by itself is a liquidity, right? Right now, we can see that the candle has dipped in it and it's moving inside, right? If this candle closes inside, based on our rules, the next potential candle has a room to go to the 50% at least, and then it can give a pullback, where is the model number 2, and then potentially in here. Could it happen? I don't know yet. But what I know right now is that this previous month high is a 50% of the CLS range, so it has high probability that the price will go in here, right? So currently, what it's giving me, let's drop to the daily, right? And I have a room for the potential bias for the another 140 pips, right? Right, so we have a chance that it can go higher. All right, so let's drop it to the weekly right now, right? What we can see in here is this, right? Let me hide this drawings from the monthly so it's not annoying for us, right? And again, do we find a CLS range in here? Yes, we have this big candle in here, right? Which is what? Which is dipping below these lows, which is a liquidity in here, right? And also is on the key level, right? So what's the information in here? What I knew in here, why I was thinking that the price will go in here on the lower time frames? Because we have the candle, then one manipulates and close inside, right? And I have a potential that the price will go higher into these highs, right? If you remember, right, you have a candle, manipulation, close inside, then the price can go to the 50% and completely into the highs, right? Is it happening here on the charts? Let me check. Right, you can see you have the candle, price closing inside, and then the third candle is expanding, right? So let's drop it to the lower time frames again. And we have, this is a monthly CLS, right? What I'm always doing, I'm always putting the annotations, because then you forgot what is on the charts and what's happening in there, right? So this is what. Let's go to the lower time frame. What's going on in here, right? We've been back in the Thursday, so I will put the replay in here, and this is where we've been on the Thursday when I've been analyzing the charts, right? And I said actually in my group that these two equal highs will be a target. If I remember it well, it was somewhere where we got it here, right? You can see these two equal highs in the bullish structure, they will be a target. So this is what I have drawn in here, and what we need to do then, if we find this, we need to position ourselves, right? So what I'm doing, we have a consolidation, right? After the consolidation can come what? Only expansion, right? If it is in the uptrend, we cannot get consolidation retracement or consolidation reversal. There could be consolidation reversal, but consolidation manipulation reversal, right? So in this moment, I know that I need to get expansion, and I need to position myself into the trade, right? So I'm on the daily and I need to drop to the lower time frame, which would be 1 hour, right? And on this 1 hour, I am looking for what? I am looking for the market to drop into the discount, right? Where I found the discount, right? So we can see here is expansion, right? From here, I will be measuring my dealing range. Why? Because this is where the price rejected the lows, right? Rejected lows, breaking the highs, right? From here, I am measuring my dealing range. And I will be looking for a trade in the discount, right? Right, so I will be looking for a trade in the discount. Now, if you remember, I said that you should be looking for the first low, which is breaking through this midpoint, right? Now, this is key, guys. Look at this. I need to drop to the lower time frame, right? Which one it would be? 15 here, right? You can see this low. This is where the price start to breaks above, right? So this low is key for me. I'm not going to be looking for the trade in this level, but for the level below this low, right? This low is a key thing for me. Now I'm looking for a level, right? What level it would be, right? Let's go back here to the 1 hour, right? And it's this, right? Obviously, the whole order block is all these consecutive candles. But by knowing that this low is the first low where the price went above that, gives me a kind of a conclusion that the price could drop into this last down candle of the order block before the price going higher, right? So this is for me a order block in here, right? And that's where from I want to trade my position, right? This is where I will be looking for a trade. Stop loss little bit below the lows, right? Always little bit, right? That's what I'm doing, because sometimes the price drops, right? Exactly, and then it goes higher. It happened to me many times, so I know this is just risking a little bit more gives me a little bit better, a higher winning ratio, right? Let's continue, right? So what's happening then? Price dropping lower, right? Now it can look like a manipulation, right? But is it already manipulation? Is it enough? No, it is not. How do I know it? Here is the thing, right? I'm always looking for the manipulation bigger than 0.15 of this range, right? So the price should drop below this level and this level also, right? So I'm not doing anything in here, right? Let's move a little bit further. You can see in here what happened. This is actually the break, right? What happened in here? The breakout traders, they entered and they've been right? They have entered in here. It's kind of just an inducement to attract more people into the trade, right? What happens in this moment? Those who entered in here, where they put the stop loss below here, right? Because why? They do not want to put stop loss here, right? That would be too like 1 to 1, maybe something like that, right? So what the price do then? Consolidates a little bit, right? If you remember, consolidation above key level was the potential outcome, manipulation, and then expansion, right? So let's see what's gonna be happening in here, right? Price goes down. This is where you enter, right? Here, stop loss is of course in here, right? And the target supposed to be in here, right? Which is giving nice potential, right? But what I did, right? Because on the higher time frame, we have analyzed this CLS range, right? Monthly 50%. I am trying to hold the trade until the price reach this level, right? So we will see how it will work. It's developing nicely. was overnight. Okay, right, and holding the trade until the price reach this level. Maybe something will happen, some more consolidation. Maybe I will be take out on the break even, right? Anyway, the trade as per the rules should be just this one, right? Which giving like 2.5 risk reward ratio, which is great, right? Everything above 1 to 2 is great, right? Forget about taking at 1 to 10 trades and these things. It's good, it happens time to time, but mostly you will get 1 to 2 and you will be adding the brick by brick, trade by trade, and you will be building your equity. That's the best way to do that, right? And again, what you can see in here right now, how many confluences we are getting in here, right? We have a monthly CLS, right? On the lower time frame, it's a weekly CLS, right? If I saw correctly this key level, I would be entering already in here, right? And had the trade in here. Anyway, didn't see that. I see the continuation in here, right? And yeah, that's it. This is it, right? I was actually felt a little bit higher because there was a kind of little bit slippage, right? But the trade is great, right? And the method is really simple. So if you want to